I went down this journey that you're going down now in 2012. And that journey led me to crypto. I saw it and I knew that this was the answer. And that's why I first bought Bitcoin in 2013, was exactly this, is once you see what has happened, we know the system now, regardless of how it ends, whether it ends in slow, ongoing death of economic vibrancy or a spectacular blow up, the answer is you need to transition to what I call the Bitcoin life raft or the parallel financial system. It's there, and you can participate with $1 or $1 billion.
Renowned macro analyst and veteran investor Raoul Pal argues that the seeds of the ultimate economic collapse were sown during the global financial crisis of 2008. In an attempt to revive the global economy after the crisis, central banks introduced a series of quantitative easing measures, which Pal believes sealed the fate of the global economy and fiat currencies. According to him, subsequent rounds of QE were inevitable and served the same purpose: to counter the system's bankruptcy through perpetual currency debasement. Pal contends that policymakers did not truly address the crisis but instead masked it by creating trillions of dollars out of thin air. However, he warns that these massive debts do not simply vanish. They eventually find their way back to the government's balance sheet with interest, leading to a continuous accumulation of debt that eats into a significant portion of the GDP. The only way forward, in Pal's view, is more debt issuance and currency debasement. He predicts that the Federal Reserve and other central banks will be compelled to implement further measures to avert the ultimate collapse. Considering quantitative easing as a survival tactic and a last-ditch effort to prevent catastrophic consequences, Pal believes that investors who comprehend these dynamics will have the knowledge and timing to make strategic investment decisions, even outperforming the size of the Federal Reserve's balance sheet. In a recent insightful discussion with Tom Bilyeu, the macro guru and CEO of Real Vision, Pal delves into these topics and provides further analysis.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
What we are doing since 2008 is mutualizing the bankruptcy of the system via the debasement of currency. You can either raise taxes, which they're trying to do too, but they're also printing currency via the mechanism called quantitative easing, which is actually debasing the currency, which means that every time they do it, asset prices optically rise. They don't actually rise. Because if you look at the central bank balance sheet and divide all assets by it, so you're changing the denominator, it's normally US dollars, but when you use the balance sheet, you say, okay, this is the purchasing power of dollars. Now, how many dollars are in the economy or excess printed? And what you find is something like the S&P 500 has gone nowhere. Real estate, gold, gone nowhere. And there's only two assets that have actually outperformed, which were crypto and technology. Okay, which is why we all feel like even though stocks are going up and our 401k is going up, nobody's getting any richer. Okay, we all know this intuitively, that we're not actually getting richer because the stocks I sell doesn't buy me more of a house. So what the fuck? What was the point of buying the stocks? If the value of my assets aren't going up. But that is a mutualization, which is bad because it mutualizes it amongst people who don't have assets. So you'll never be able to buy an asset, which is why when you speak to a millennial now, they're like, we can't afford a house. Why? Because they came in to the labor force after the Fed started monetizing or lowering the value of the denominator. So property's got more and more expensive for them. It's impossible for them to buy property, really, unless they're really lucky in the workforce or in entrepreneurship or whatever it is. But generally speaking, it's become impossible. And everything has got more and more expensive, assets have, because of this optical illusion. But wages haven't gone up, remember, right? That's the key thing. Assets are going like this. We were doing this before because of demographics, and it was making people pissed. And now we're doing it from debasement, and there's no way around it. So what debasement does, on the other hand, remember, it makes the price of assets look like it's going up. This is why you can't have a banking crisis of the order of magnitude that existed before 2008. The reason being is you just print money the moment you see it, and voila, everything goes up. So the value of your collateral, so if you think about a debt, it's collateral plus the debt, and the collateral is what guarantees the debt. If you've got a banking crisis, your collateral is often falling so fast that, like commercial real estate, right? We're going to have a problem with that. So there's a bunch of debt, and the banks have got this commercial real estate as collateral, and it's all bloody empty, and everybody's going to try and get out of it. So the answer to that is print money and essentially magic that collateral higher, or put it on the central bank balance sheet. Europe has already done this. So I don't think you can have a systemic collapse because the value of the assets can never go down enough.
Currently, Raoul Pal acknowledges that central bankers and policymakers appear to have a grip on the situation by continuously printing money and providing support to the markets. He anticipates that the economy will persist in its current state, surviving on massive debts and additional debt issuance. While the system may be barely operational, it manages to endure. However, Pal does not completely dismiss the possibility of a sudden and comprehensive collapse that could bring everything crashing down. According to Pal, the most viable solution for investors is to allocate their investments in cryptocurrencies and technology. These are the only two asset classes that have consistently outperformed the government's balance sheet. Conversely, other investment instruments have trailed behind the balance sheet over the past 15 years. In his discussion, Pal delves into his predictions for the future of crypto and technology, considering how these sectors are scrambling to rescue the global economy and prevent the occurrence of an ultimate collapse.
What I think my hypothesis is that, okay, this is very observable. I think it's going to last, this relationship between assets and the central bank balance sheet, because of the mechanism of debasement of currency. And I can forecast out what the business cycle looks like. And I also know the amount of interest payments that need to be made, because they happened 3.5 years ago. And I can see how far the balance sheet's going to expand. So the balance sheet right now is what, $6.5 trillion. And it looks like it will get $7 trillion or so. And it looks like it will get to $12 to $14 trillion by the end of 2025. So that puts, and there's a number of other ways I've proven this out in this whole thing. And I'll send you the whole piece myself, because I've not really gone public with all of the whole thing of how it works. But in the end, that puts asset prices massively higher than here, hugely higher. So we're looking at more than a doubling of the NASDAQ from here. We're looking at another gigantic crypto run. That's into 2025. So we're seeing huge moves that just come from the debasement. And I've gone through in the Everything Code article that I wrote for Global Macro Investor, which is my kind of premium research service. In that, I've gone through various ways of proving this all out. So that's what I think I can do. But your observation, I think, is really important. Okay, when people, I mean, I've sent this to quite a few people, and obviously the subscribers of Global Macro Investor are kind of the world's most famous hedge fund managers, asset managers. And I think it really shocked people and resonated with people. They're like, oh my God, everything makes sense now. And so once you see it, it all makes sense. Now, as it becomes more public as a thesis, and Mike Howell at Cross Border Capital has been talking some elements of this, liquidity, you can see liquidity becoming part of the conversation on financial Twitter and stuff now. What I think we'll probably do is create boom bust cycles. Again, you can't have the bust cycle going below the level of central bank liquidity, because optically they make it rise. This is what people don't yet understand. But of course, the stock market should go down 90%. Can't happen. Literally can't happen because of the debasement. It's a money illusion. But what I think we'll do is see, hey, off we go to the races. That's what happened in 2018. 19, early 20, we actually diverged from the central bank balance sheet massively, because people starting to figure out this game, which is the moment the Fed stop the tightening cycle, markets take off, because they know that the probability of more cowbell, more central bank printing of money, more interest rate cuts is coming. And so therefore we get boom bust cycles. So the boom times are too big, and then you get a bust. And people know that from crypto as well. The long-term trend remains intact, but we keep getting these huge booms, collapse, boom, collapse, but the trend is still up. I think that's what we'll see. We'll be more like the crypto cycle, which is pretty much what we've just seen as well. We had a big collapse last year, and now we're straight back into the boom as we're starting to forecast this. If you own crypto or technology, you'll outperform this entire thing. Now, if you're not wealthy enough to buy set up a brokerage account doing that because it's complicated for you. You can do it with crypto for no money, and you'll participate not only in the trend of debasement, so you're not getting left behind. Because if you're just getting an income and you're not buying any assets, you're truly getting behind. So your 401k may look like the S&P 500. That's not making you any richer. Just buy technology or buy crypto, and those are the only two assets that outperform the central bank balance sheet.
Raoul predicts that the United States is on the verge of a recession. As a result, he anticipates that the Federal Reserve will expand its balance sheet significantly to reach a staggering $12 trillion by the conclusion of 2025. Considering this scenario, he wonders about the potential impact on digital asset prices both in 2023 and beyond. Please share your thoughts and observations in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.